Today we will talk about why haters will absolutely cry at the $500 Bitmine stock. Okay, let's dive in.
Welcome to the game, I'm the wolf of Dubai.
If you don't know me, this is my second channel. Subscribe me to this channel, but also to my main channel with over 39,000 subscribers. And if you are watching this for the very first time, my name is Danny, and I'm looking for stocks that can go 10, 20, 30, 40, 50, 60x, 100x maybe. And I did this for many stocks, like for example, Tesla. And my subscribers back then believed in me. They understood the logic of my thesis. They watched me for months and months and months, and they bought houses or apartments. So the return of investment being subscribed and watching my videos can be quite high. Now, with that said, and let's put this to the side, I also have my own group called xtendaytrading.com, where we developed a software. I spent over $1 million in developing the software, and the software allows our day trading team to send all our day trades into your portfolio without having any access to your portfolio, just by having a special software to send it to you. So you get all the trades without doing nothing. You just have to start the software and it's all done for you. And we have amazing success over the last 3 years. As you can see, those were the trades only from this week. And now this to the side, let's dive into the haters. You know, I made a small video about haters a couple of days ago. If you haven't watched it, you know, go and watch it. But I think that when you talk about haters, you need to understand, like, the people don't hate this person that they see there, because they don't even know me and they don't even have enough information to hate me, okay? And then there's people that they don't even hate the stock. They just don't hate, like, why you should hate the stock. You hate the stock not because of the colors of the logo or, you know, maybe about the product, but really why you hating a stock is actually only because you hate the performance. And most people are actually traumatized because they have very little experience, or they have very bad experience, and a lot of it from this specific stock. You remember all the comments that I showed you, you know, this and this, you know, comments that were so bad on my channel that I saw for every, you know, bad comment or negative comment, I would love to buy, you know, 100 more shares of Bitmine. I was so getting more and more bullish. And just 2 weeks later, we are at totally different prices for Bitmine. So I think, like, let's put this to the side. Okay, they don't hate the person that is talking about the stock, you know, not even Tom Lee or, you know, myself, you know, they don't hate the company or the logo or the color of the logo. They hate the performance. And we know there's a couple of reasons. They have bad experience, they have no experience, and they bought at the wrong price. They don't dollar cost average into a position. They just buy, let's say, $10,000. Let's buy it now because it went up. And then they remember the stock is going down, and they see, like, well, you know, the stock is going down. Why it's going down? It's a very bad stock. It's a very bad person talking about the stock. The stock performance is horrible. Well, stocks go up and stocks go down. Okay, they have to be no reason for the company that the stock goes down. And I think this is one of the most important points. Okay, don't get influenced by other people. Don't get influenced by, you know, YouTubers. Don't get influenced by news or headlines. Be influenced. The most important part, in my personal opinion, be curious about the stock market and about the company that you want to invest in. Invest and start with a very little amount, okay? Let's say you want to invest $10,000. Then start with 100 and see where it goes. Keep it on your watch list. Enter a little bit more after you know a little bit about the stock. Actually, this is exactly the same way like Stan Druckenmiller, one of the most successful billionaire investor, actually invests into companies. He buys a little bit, then he researches, then he gets more into it, then he buys more, he adds more, he also sells his position, and so on. So he's actively managing, but always he says that, let's see if I find a clip. Let's put the clip here.
Your excitement about AI sort of came into play with that discussion, because you're worried that it's going to take a lot of investment and there's no savings. We got to build up the defense. There's wars everywhere. And you were early with NVIDIA. You were early with AI. You pared back a little bit, but are not less bullish on the prospects for it, are you?
Well, first of all, I wasn't early with NVIDIA. My young partner was early with NVIDIA. He called me in the fall of 22 and said that he thought all this excitement about blockchain was going to be far outweighed by AI and I asked him how to play it, and he told me I should buy this company, NVIDIA. I didn't even know how to spell it. I bought it. Then a month later, ChatGPT happened. Even an old guy like me could figure out, okay, what that meant. So I increased the position substantially. I said in an interview in June of that year that I expected to own NVIDIA for 2 or 3 years, that this was a mega trend like I'd never seen, potentially bigger than the internet. But when the stock went from 150 to 900, I'm not Warren Buffett. I don't own things for 10 or 20 years. I wish I was Warren Buffett. And 150 to 900, yes, we did cut that position and a lot of other positions in late March. I just need a break. We've had a hell of a run. A lot of what we recognized has become recognized by the marketplace now. We expected Powell to come back and repivot, which he subsequently did. But no, long term, we're as bullish on AI as we've ever been. You just wonder, if we were all sitting here in 1999 talking about the internet, or anybody was talking about it, I don't think anybody would have estimated it would be as big as it got in 20 years. We didn't have the iPhone, we didn't have Uber, we didn't have Facebook, yada, yada. And yet, if you bought the NASDAQ in 99, it went down 80% before that all came to fruition. That's not going to happen with AI, but it could rhyme. AI could rhyme with the internet. As we go through all this capital spending we need to do, the payoff, while it's incrementally coming in by the day, the big payoff might be 4 to 5 years from now. So AI might be a little overhyped now, but underhyped long term.
You said you're not like Warren Buffett, but what you just did with NVIDIA sounds an awful lot like what he did with Apple. He pared his position in Apple by 13% and then went on to say it's a better company than Coca-Cola or American Express or any of the other companies that they have in their portfolio. And he thinks Tim Cook is great.
Yeah, well, I will be very surprised if I don't own NVIDIA on and off the next 10 years.
You're so bullish on AI that, Andrew, you did a great interview with Perplexity, and I think that's where you have decided might be a place that you want to be.
I love Perplexity. Again, a funny story. My young partner, the one who has basically been behind all our AI play with his staff, he told me, I don't know, in January, that all the kids on the West Coast weren't using ChatGPT or Google anymore. They were using this thing called Perplexity AI. So I, of course, tried it out, and it was just unbelievable. It's an answer machine, but the speed, but the depth of the answers and the quality, and then the fact that they give you the sources if you want to go deeper, it was nothing like I've ever seen. If you don't believe me, just ask ChatGPT, Gemini, and Perplexity a question and get the answer, and you'll see exactly what I'm talking about. Right. I fell so in love with it. We tried to get in on a round that we were lucky enough to be accommodated. I love the founder, Aravind Srinivas. He's super aggressive and with his team super innovative, but he's also got humility. He's everything we love in a founder. So there's a land grab going on now in the answer machine business. It's obviously a big task to take on Google, but if you think about it, Google has $300 billion in sales. If Perplexity even goes to $2 billion in sales, it'll be a huge winner. Frankly, I'd say 95% of my searches now I use Perplexity. Probably the best thing I could do for the viewers today, unless they're listening to all my other stuff. Try this thing out. You'll love it.
He was actually, I think, I don't remember, but I think since 20 years, he never had a down year. Imagine that. How good he must be that he does that. So haters will go absolutely ballistic when the stock will go to 500. You will be maybe very wealthy. I will be very wealthy. And, we all can be wealthy together. But I think that the most important takeaway is always make your own research, because there can be nothing stronger than hard facts that you can find through your research. And I'm not saying just the tip of the iceberg and say I went through the recent earnings report. No, I mean go through the balance sheet, go through the vitas or bios of the people in the leadership, study what the company is actually doing, try their product if possible, understand the thesis, watch every podcast, every interview that you can find, go and read all the bear cases, but also read all the bull cases. Investing 100 hours into one specific company is not really enough. You need to go deeper. And that's why I believe to be really, really successful is not possible by owning, 10, 20, 30 stocks in your portfolio. That's good for diversification. But as Warren Buffett, and I show you the clip, shows, diversification is actually for people that don't know what they're doing.
The question is about diversification, and I've got a dual answer to that. If you are not a professional investor, if your goal is not to manage money in such a way as to get a significantly better return than the world, then I believe in extreme diversification. I mean, so I believe 98 or 99%, maybe more than 99% of people who invest should extensively diversify and not trade. So that leads them to an index fund type of decision with very low costs, because all they're going to do is own a part of America, and they made a decision that owning part of America is worthwhile. I don't quarrel with that at all. That is the way they should approach it, unless they want to bring an intensity to the game to make a decision and start evaluating businesses. But once you're in the business of evaluating businesses and you decide that you're going to bring the effort and intensity and time involved to get that job done, then I think that diversification is a terrible mistake and to any degree. And I got asked that question when I was at SunTrust the other day. And if you really know businesses, you probably shouldn't own more than 6 of them. I mean, if you can identify 6 wonderful businesses, that is all the diversification you need, and you're going to make a lot of money. And I will guarantee you that going into a 7th one is going to, rather than putting more money in your first one, it's got to be a terrible mistake. Very few people have gotten rich on their 7th best idea, but a lot of people have gotten rich on their best idea.
Omission is way bigger than commission. There's big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you've really got to grab them when they come, because you're not going to get 500 great opportunities. You would be better off if when you got out of school here, you got a punch card with 20 punches on it. And every financial decision you made, you used up a punch. You'd get very rich because you'd think through very hard each one. I mean, you went to a cocktail party and somebody talked about a company, you didn't even understand what they did or couldn't pronounce the name, but they made some money last week and another one like it. You wouldn't buy it if you only had 20 punches on that card. There's a temptation to dabble, particularly during bull markets. In stocks, it's so easy. It's easier now than ever because you can do it online. Just you click it in and maybe it goes up a point and you get excited about that and you buy another one the next day and so on. You can't make any money over time doing that. But if you had a punch card with only 20 punches, you weren't going to get another one in the rest of your life. You would think a long time before every investment decision, and you would make good ones and you'd make big ones. And you probably wouldn't even use all 20 punches in your lifetime, but you wouldn't need to. Yep.
So you can see even Warren Buffett has always a very nice wisdom for us to invest. So I think that this is very important. Make sure to check out xtendaytrading.com because xtendaytrading.com will raise our joining fee in a couple of days. And also make sure to schedule a call with me personally and we see if we can trade for you as well. And I see you tomorrow for a brand new video. And make sure to subscribe and smash that notification bell as well.